Hello, everyone. I hope you are having a good week. This week's subject is when should you sell an investment? To successfully manage a portfolio, an investor has two types of decisions to make: when to buy an investment and when to sell it. Often our emotions get in the way. Examples include holding an investment too long, thus allowing losses to accumulate, as well as selling too soon and missing out on some gains. To help avoid these defeating behaviors, here are some suggestions for deciding when it is time to sell. Decide in advance just how far a security's market price should be permitted to go up before you sold it. The maximum upside is the trigger for selling in order to take gains. The maximum downside is the threshold that can be used to limit losses or protect what profits you may already have for the investment. This range can be adjusted as stock prices rise over time. Rebalancing your portfolio back to the asset allocation you have chosen may force you to take some investment gains off the table. Maybe due to market movements, you are overly concentrated in one asset class, and it is time to sell part of an investment to get to the percentage of your portfolio you originally chosen for the position. It is a good idea to review rebalancing your portfolio periodically. Rebalancing is a chance to monitor your portfolio allocation and which investments are outside of the targets you have set. Some investors rebalance semi-annually, some do it once a year. Be aware that rebalancing too often can also increase trading costs, however. The next one is maybe your original investment plan no longer fits your goals. For example, retirement is coming sooner than you thought, and you'd like a more conservative portfolio. In this case, you might decide it is time to sell some of your riskier positions, such as stocks, and buy safer assets, such as bonds. There might be investments available that better meet your needs. Next one is better opportunities have come along. For example, perhaps a closed mutual fund that you always wanted to purchase a few years ago finally reopens and the fund still meets your purchasing criteria. It might make sense to sell an investment and make that purchase. Next one is the investment doesn't live up to your expectations. Just make sure you compare it to the appropriate peer group before making this decision. Also consider tax loss harvesting. While we wouldn't suggest having tax implications drive the activity in a portfolio, taxes are a consideration. If you were selling anyway, it might make sense to sell positions trading at a loss in order to offset the gains you were going to incur. Make sure you understand what are called wash sale rules before buying back a similar asset. Consider whether or not fundamentals have changed as well. For example, if you thought a stock had growth potential but seems to have stalled out, try to determine if the stall is temporary or could be longer term. Research and decide for yourself what fundamentals matter for the investments that you've chosen. You might look at price to earnings ratios, the company's balance sheet, or its management, for example. If you make a mistake when investing, perhaps you took time to analyze a stock, but later on you discovered an error in the analysis or simply weren't correct in your assessment. The best solution might be to learn from that error and sell the investment. So perhaps now is the time to sell if you have achieved one of your goals. Your hard work has paid off and you sell the investments to fund a college education, or perhaps you sell investments to create retirement income. Finally, you may have that down payment for a house that you've been saving for. Remember that with selling, the objective is not to time the market, but not to be stuck either. The main point to all of these is not to sell an investment based on emotions, but with a well thought out, reasoned approach. Research and education will certainly help you along the way.